I found this capital gains calculation that I did for a client of mine. This person sold their property for $2 million, owned a 50-50 between two partners, and the purchase price of the property was 1.9 mil. So there's like 5 elements of being able to calculate the cost that you can claim against that 2 mil. So the whole point is trying to calculate the profit, the capital gains. So you can add all the sale and selling fees, which is marketing, agency costs and all that. But you can also add the purchase costs as well, purchase legal fees. And then you also have the purchase price was initially, back in the day, like 2 years ago. In total, when you add all these costs up, it worked out to be 66K plus the 1.9 mil. And then it worked out to be 1.966. And as a result, because they sold it for $2 million, the capital gain is $48,000. There is renovations that you can also add in. If you spent money to improve the value of the property, you can also add that in. So that's where you can actually minimize the cost. So for example, if you spent like 150K in renovations, that could mean that you actually made a loss in the sale of the property if you sold it for 2 mil. So that's how to calculate the capital gains. If it's a loss, what happens is that loss then gets carried forward over to the next few years. If you buy another investment property or you sell shares, you can offset that 100K loss against the future profits that you make in capital gains.